Good evening, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is a Tuesday, March 9, 2010, New York Evening Forex Report. Let me remind everybody that trading Forex is risky. It should only be done with risk capital that will not change your lifestyle. Traders could lose all the risk capital. Trading Forex FXD does not guarantee any recommendations made within its commentary. Traders should make market assessments, take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXD does not guarantee the accuracy of the information. The day was a day of the dollar getting stronger, then the dollar getting weaker. The stronger part came off of weak UK data. We also had some information coming out of Moody's and Fitch in regard to the UK and the UK banks. We have the Greece situation. We have uh, a weaker than expected trade deficit out of the UK. We have China talking about how they're wary of gold prices. That led to the dollar getting stronger, and all this happened before New York opened, and then when New York opened, things started to reverse, and we started to see movements to the upside. Part of it was off of a Cisco announcement where they said they were going to revolutionize uh, the internet through the use of a new router that they're developing that's supposed to increase the speeds and transfer ability of the routers by I think 12 times faster than the last one. And we also saw gold prices come back after being down 11, 12 bucks, only down about $2 as we enter into the close here. So all that contributed to the market staying again within its boundaries here, which have become all too used to. So let's go take a look at some of our technicals, and we'll start with the euro versus the US dollar. And today, as you can see, the market started off very nicely using the 100-hour moving average as resistance, breaking through the 200-hour moving average, moving to a low, which came down to this 61.8% retracement level at 135.51. You can see that the market did break below that level for a brief moment, but then started to move back above it. A failure, just like it failed at this point right here, and the failure led to a rally here and led to a rally here today. Now I must say that the rally off of this move was a lot less than this move off of the low here. In fact, the low went way up here above the 38.2, and then the next day went flying high to the upside. Today we only were able to get above the 200 bar moving average there for 1 bar, and then it started to come down below that level. So that is a positive. Let's zoom in here, take a look at this, so you can see how the market moved above. And really, apart from this close at this bar right here, which is the one preceding the one, the market has been able to stay below this level once again, the 200 bar moving average. So as long as the price can remain below this 200 hour moving average at 136.05, the bias seems to the downside. Now we're only trading at 136 even, so the stop is very close, and if we should move above, we should head up toward this 136.27 level, 21 level, up to the top side here tonight. That would be target levels on the top side if we're able to break above this 200 hour moving average. But right now, it seems like bias remains to the downside. We'll see. We'll see what happens. Now there's good support down here at 135.26, and again, because we failed twice below this 136.51 level, going back to this time right here, then we should see some further support. It just increases the support down there at the 136.35.51 level, but that may also increase the selling if the market is able to break through and develop the momentum to the downside. So we're always looking going forward, because we've been in this range for 14 days, that the market is going to break one way or the other. And it all starts by going through key levels and being able to maintain that momentum to the downside or to the upside, depending which way it goes. So on the downside, we're watching the 100-hour moving average, or on the upside, we're watching that 100-hour moving average. On the downside, we're watching 86 level. We can watch 135.51 on the downside for the euro versus US dollar. Let's transition into the sterling versus the US dollar. We'll take a look at the hourly chart. We'll know what the daily chart looks like. Off the hourly chart, this currency pair also stayed below the 100-hour moving average. Went up and tested in the first hour, and then moved sharply down. And this also came down to a key support level at the 61.8% retracement. That 61.8% retracement is of this move up from the the March low, which occurred at 148.54, and the March high, which occurred just yesterday at 151.94. So in 2 days we came down and corrected, or day and a half came down, corrected to 61.8, 149.39. The market said, even though we have lots of bearish news, that's enough, and the market had this support down here against the level, moved back above it, left this nice big tail in this chart, and then it started to move higher here. Now we are at this key 50% retracement of this move, of the same move up. You can see that was an initial low here, and it was also the 50% retracement. So at 149.88, the market has good support here, and as long as the price can remain above that level, we could see further upside momentum in the sterling versus U.S. dollar. And you can see in the last hour we went down, tested that level, and started to move high. Whereas resistance up at 150.37, up at the top here, and then also at the 100-hour moving average comes in at 150.63. If the market starts to move back below this 149.88 level, I would think that the bias turns a little bit to the downside here in the sterling versus U.S. dollar. I could see the market move back toward this 149.39. Let's see how the 5-minute chart is. Maybe it'll give us some clues as well. We are in this channel here off the 5-minute chart. 1, 2, 3, a number of different lines here. Also, the 100-bar moving average comes in at 149.87. So that 149.88 level is going to be a key level to the downside. If we are able to get through that level, then we should see further moves to the downside here. Watch 76. There's some lows here off the 5-minute chart, lows and highs at 149.76. We get through that level. That may also increase the selling momentum. But right now we're seeing higher highs in the sterling versus U.S. dollar through most of the New York session here, and the good news is that we are seeing a lower low here, and as long as the price can remain below these highs, then maybe the bias is going to turn back to the downside for this currency pair. Let's go to the Japanese yen. On the daily chart, we broke below the 100-day moving average at 90.14 last night, moved to lows. Current price is trading 89.95. The high during the New York session came in at 90.03, so we're going to be watching 90.14 level above. You can see that when the market, so put a line in your chart at 90.14. That's 100-day moving average. Yesterday we came down to that level. Today we broke through that level, and the highest high after the break to the downside occurred at 90.09. So we'll be watching that level on the top side for the dollar versus yen on the downside. If the market should move back to the downside, look for 89.58 to be a support level for the dollar versus yen. Let's look at the 5-minute chart, and you can see that the market broke through this 90.15 level, moved down, had a correction up to 90.09, and then started its correction to the upside here off of the move down from yesterday's high to the low, and we did correct almost 50% of that move, getting to a high of 90.01. The 50% came in at 90.05. Currently we're trading at 89.95. We're also above the 100-bar moving average at 89.90. We'll be watching that level as long as the price can remain above it. The bias remains to the upside for that currency pair. The Aussie versus U.S. dollar. Take a look at that. We held the 100-day moving average and started to move higher here off the correction on the downside. That 100-day moving average came in at the 90.67. We actually went a little bit below it. I'm going to go back to that chart. This is 90.67. We went to a low of 90.54. Where did we stop? We stopped at the 100-hour moving average on the downside. So although we had the 100-day moving average at 90.67, the 100-hour moving average trumped it, or the fact that we held that level was positive, and the market found some momentum when the market got back above the 90.67, and you can see that we're closing near the highs here in the Aussie versus U.S. dollar as the market continues to go higher into the Far East session. Now tomorrow in New Zealand we have their interest rate decision, so it might as well take a look at what that market is doing here. We often don't look at this, but currently the bias remains to the upside today. Today Today and yesterday we went up to and tested the 200-day moving average. That 200-day moving average came in at 69.57. You can see that both the lows were there. Like the Euro, Aussie versus US dollar, we're trading near the highs. The bias looks to the upside for that currency pair. 69.63 is the 100-day moving average. As long as the price can remain above that level, that would be positive for the New Zealand versus US dollar. Over the last few days, the market has also moved above the 100-hour moving average and the 200-hour moving average, giving it a bias to the upside and moving transition to the 5-minute chart. We're going to be watching the 70.11 area on the downside. If the markets stay above this 100-bar moving average, the bias remains to the upside. So that's my report. Wish everybody good luck.